We're going through a very dramatic changing world. What dollar will be in the next few years, the role of dollar could be changed dramatically.
Welcome to Rethinking the Dollar. Today I'm excited to have my guest, Mr. Chen Lin, the founder of Lin Asset Management, LLC. Today he joins us to share his thoughts on the economy as well as the importance of owning precious metals. Mr. Lin is the publisher of What is Chen's Buying and What is Chen Selling, a stock newsletter using both value-oriented approach as well as technical analysis for market timing. So, Mr. Lin, thank you for joining me on Rethinking the Dollar.
Thank you, Mike. My pleasure.
Well, I appreciate you taking time on your day to sit down with me. I know you're leaving for a conference soon, but I appreciate you making time for me. And so, as always, Rethinking the Dollar, I love to bring new guests to our viewers, so they can get a better understanding of what Rethinking the Dollar means from a global standpoint. And so, first question of today is, what comes to mind when Chen Lin hears the words Rethinking the Dollar?
Well, it's a very good topic. We're going through a very dramatic changing world. Okay, so what dollar will be in the next few years will be the role of dollar could be changed dramatically. So for us, for investor, we need to be one step ahead of the game. So think ahead. So I really like the topic.
All right, sounds good. So I appreciate you sharing that. Now, you're big in investments. You're an asset manager. And so I want to get your thoughts on just education in general. A lot of things in reference to finances is not really taught in school. So most people start off at a disadvantage just because they don't know how to handle their own money. And so in your opinion, would you think that financial literacy as well as just being able to invest with an alternative approaches is a good method and model in this day and age currently?
It's one of the possibilities. Again, my advice to individual investor is basically test out yourself. Use your strengths. You know yourself, strengths and weakness. Try to not to gamble too much, take too much risk. But you can check out different way to invest, and then whatever's best suit for you.
Right, understandable. Now you mentioned risk, and so a lot of people don't understand what all entail with risk itself. Can you elaborate a little bit on what type of risk and basically how can you break it down to someone who may not be an active investor? They're more of a passive investor. How can they become more active in their handling their own financials properly?
Yes, that's a very good question. Unfortunately, the risk is in all the different commodities, in all the different investment is very high. Okay, a lot of people didn't recognize that. Even gold can go up and down like crazy. So for investors, you really need to look at the maximum loss you can afford. And people when they invest always think about how much we can gain, but also you need to think about how much loss you can afford. So by doing that, you can have put a limit on what maximum allowable loss can be. Okay, and then try to invest and then try to look for the upside.
Right, understandable. Now, before we dive any further into any more in-depth questions, for those that may not know who Chen Lin is, can you give us a little bit of your background as how you arrived into being an asset manager of your own fund?
Oh yeah, I used to run startup in California 20 years ago. So and then as I going through this exciting startup age, I found myself more and more interested in investing, and mostly it's just start managing my family asset, like my personal IRA, my wife IRA, and then it just grow and grow every year. So so far so good. So I start managing my family's asset.
Understandable. Now I know one thing in reference to your What is Chen Buying and What is Chen Selling newsletter. I actually on your website did some research and saw that you talk about risk a lot, as well as the buy and hold model, of which you tend to not do that. So are you more in the trading aspect, or what's nowadays, given all the stuff that's happening with the Dow dropping the way it did this past December, we're it's a lot of volatility out here in the equities markets. How do you as an investor, as well as a manager, manage risk yourself in environments such as one we're in now?
That's a very good question. Okay, what I found in the past years, there's more and more computer trading. Okay, much more computer driven. So the sentiment can swing wildly. One day there's like everybody selling, there's no end in sight. Now is the stock market going up like crazy. So for investor, you need to see what's, a slightly a step ahead, what I call it, from all these smoke and mirrors, see what's going to likely happen, and then has basically you need to determine what your strategy is and stick with it.
Yeah,
even in the most difficult time.
Right, understandable. And so I'm curious, as far as your opinion, given that you study the markets from an investment and as well as a trading standpoint, in this past year, December, the Dow was up a couple hundred, down a couple hundred the next day. In your opinion, what was behind all of that, and is that an indicator of what we should expect in the future when it comes to trading in that particular vehicle there?
Well, yeah, exactly. So we have a very long rally since 2009. It's one of the longest bull market on the record. So at the end, we are looking at the end of the bull market. It may last for a year, maybe last a couple of years. Okay. So, but on the other hand, all these fund managers are very nervous. When they see anything goes wrong, they start pulling out. When they start putting all these computer algorithms start to calculate, all the funds are selling, so they are one front running the fund. So actually, it's just a snowball add on and on. So that make it very difficult for individual investor, especially in the next couple of years until all these things settle.
Yeah. Now, we're talking about looking ahead, and so I'm assuming you're referring to a market correction or a slowdown, or some people say a recession. And so, as an investor, as far in the money management side of things, how do you gauge and prepare or hedge against the threat of some type of recession, similar to what you just mentioned that happened with the Great Recession of 08, 09?
Yeah, good question. So it's always people always want to hedge, but when the time comes, sometimes people just forgot. So one thing, okay, to potentially, okay, I think we probably will come into recession in the next 1 or 2 years. Okay, that's most likely scenario. It could be. It depends on the monetary policy. Can be extended a little bit longer. So for you need to examine your portfolio. You look at your holdings, right? Even in the worst possible scenario, how low can they drop? So you should ask yourself for those kind of questions. Mm-hmm. So that you can that's where you define the risk. You ask about risk at the beginning. So that's part of the exercise you need to start doing, not just look at the stock market going up and start chasing it.
Right. Now, understandable. Now, as far as risk, how low can it go? To ask yourself question-wise. Now, given the fact right now, I looked at the Dow's close to 26,000. I've heard people mention it can go a lot higher, but not too many people actually talk about how low can it go. And so as far as managing risk, in your opinion, what are some of the threats out there that could take that the Dow Jones down, as well as other exchanges? And so how low could it go to where it could be like something we've probably never experienced prior in our lives, in our livelihood, more likely? Is that possible or no?
Well, there's no bottom. Okay, that's one thing I learned. When they drop, there's no bottom. So, but one thing you also know from the back experience is, as soon as it dropped, the Fed got scared, just like what happened in the past few months. They will start cutting interest rate instead of raising interest rate. They will start to printing, doing more QE instead of tightening. So they would do completely reverse. So they were flooded with money. So first thing I say is, when they drop, there's no bottom. But on the other hand, when they drop, the Fed will come to rescue. They will flood everywhere with all the money. So that actually will be very good for gold.
Very good for gold. Now, I definitely want to get on gold, but yet you mentioned a couple of things about the Fed and quantitative easing and them coming to the rescue. And so I'm assuming you have to follow, the rate hikes as of late. And so, do you think they're going to hike rates again? And is that going to be good for investors or harmful for investors? What are your thoughts on that?
Well, the Fed changed the tone completely in the past few months, and right now they're on hold. I think it depends on the global economy. It possibly they could have another hike, and also could have ease. That will be data driven in the next few months.
Mm-hmm.
However, okay, the key is to look into 2020. So I've been talking with a lot of friends about that. 2020, the election, what's going to happen? Who will be on the Democratic ticket? That's very important. You look at the progressive right now, they're talking about free college tuition, free healthcare, minimum wages, maybe money for all, right? So if scenario will happen, the federal deficit of United States will explode. It not 1 trillion a year, it will be 3, 4, 5 or more per year. So then you think about the goal, you're not talking about $1,300 goal, you're probably talking about $3,100 goal. Those are very, very different scenario. It can happen. So in general, my feeling, or my gut feeling is 2020 will be a good year for gold, likely be a good year. Just people think about the possibility of that happen. It will be good for gold. However, 2019, this year could be a little bit rough right now, in the next few months until we go through this period.
Yeah. Now, you hinted at gold a couple of times there, so let's go ahead and take it to gold. Now, you said by 2020, based upon what's happening with the presidential election that's coming up, based upon whether it goes extreme left or stays where it's at now. And so gold itself, right around 1,300 an ounce right now. So a lot of people in the alternative media space mentioned that gold can still dip a little lower. And so do you think that is the case, and does it even matter? Is it more of like, as long as you have it in your possession, it can go down as much as they want to take it down, or what? What are your thoughts from an investment standpoint?
Yeah, that's a very good question. Right now, gold is holding on to 1,300. It could go lower. There is a rush into gold by a lot of people who didn't know gold in the past months, or if not a few weeks. I've been getting a lot of phone calls from fund managers who have been investing in gold for a long time and want to get into gold. And then 2 weeks ago when gold was really high, and then those people want to try to buy. I said, okay, you buy, I sell. So I took some profit of gold in the past 2 weeks. And then those people who are really new to gold, and suddenly they got a cold feet. I don't know what's going to happen. If they may stop out because they have different strategy than us. So that could create a good buying opportunity. Secondary, gold is very seasonal. Okay, the gold, you look at the historical pattern in the past 10, 20 years, gold always bottom around fall, and then they top above Chinese New Year. Okay, this year Chinese New Year come and still going up, so I hold on for a little bit longer. But I took a lot of profit off in the past 2 weeks, and let's wait for a few, right now. From now, after Chinese New Year, you have to wait for almost the end of the year for the Indian holiday for the gold physical buying. So the next few months can be rough, but it will be a great opportunity for those who are looking for 2020 or even beyond, for long-term investor to start build a position in the next few months.
Yeah. Now you mentioned the Chinese New Year, and so we have to wait and see. So what type of correlation and what type of connection does that particular event there have with the overall global price of gold from an Eastern standpoint? Because we don't really get a chance to find out much about what happens on that side of the planet.
Yeah, very good question. There are two largest gold consumer. One is India, one is China. So that's why gold season usually start in the fall. When the Indian holiday around October, time to start, people start buying gold. They buy gold around holiday to Chinese New Year, where Chinese buy a lot of gold and as a gift in the Chinese New Year. So around October, November, December, till Chinese New Year, January, February are usually the strong season of gold. And afterwards, usually gold can come down or sideways, depends on each year is different. Okay, so we are coming to a weak season of gold right now.
Interesting. Now, a weak season in basically the fact that the dollar hasn't really dropped much in comparison to the actual purchasing price of gold, rather. But in other currencies around the world, especially, the dollar price of those currencies, of the gold price rather, has gone up. And so the currencies have gone down in value and the price of acquiring that particular metal has gone up. So what is that telling us, or what does that tell you as an investor about the rush to gold in other countries that are having currency issues? Are we at the point where, like, so for example, the emerging markets are starting to experience problems where citizens are now recognizing the importance of holding gold, or what? What are your thoughts on that?
That's a very good question. Yes, gold is going up in a lot of other currencies, in Australia, particular, Canada, New Zealand, and many other emerging markets. Okay, other. So actually, very good for gold miners operating in those currency, in those country whose currency are weak. And also, there are people buying gold to hedge their currency. Okay, so this can go both ways. Unfortunately, people buy, usually buy gold as it goes up, but sometimes when people need to spend the money, they sell gold for other things. So one possibility, I was just talking to some other fund manager, potentially what can drive down gold this year could be a crisis in one of those emerging markets who own a lot of gold. Because it happened in the Asian crisis, right, in 1998. When the Asian crisis hit Korea, for example, people just wait in line to sell their gold and silver to make ends meet. So that's actually, if you remember that time, gold was very weak. So this, I don't say it will happen, but it's one of the possibilities.
Wow. So in your opinion, what country, or is it what type of event could probably come? Because a lot of people are rushing to gold now. So do you think an isolated event could actually cause the price to drop to where I would assume that would be an actual great time to buy from a physical standpoint if you can get your hands on some?
Exactly. Well, I'll give you one example, okay? Because right now, because things were changing, we have news every day, right? Since Trump was in meeting with Kim. You see, India and Pakistan, they have a border clash, right? India and Pakistan. If there's a full-out war, I'm not saying they're going to. If there's a full-out war, and then India is one of the largest consumer in the world of gold. If they got into any hardship, I'm not saying India will get to, but if it happened, there could be people selling gold to make ends meet. Then that could be a great buying opportunity for us waiting.
Oh, wow, that's interesting. Now let's talk a little bit about some of the developments on the Eastern Hemisphere. And so over here, all we're hearing now is either the wall or the trade relations between China and the U.S. and what President Trump is doing in the mainstream news. But not many people actually get a chance to talk about the developments out east with all of the Asian Infrastructure Bank, the AIB, we got the BRICS, we got all those acronyms out there for development and institutions that's been put in place. In your opinion, what's all that for? What's all that development for? Is it because of something that's coming down the line, or what? What are your thoughts on that?
Well, in Asia, there's a very large populations, right? So they're building a lot of, in China particularly, build a lot of infrastructure. And there's, it's overbuilt of those infrastructure material and so on and so forth. So China came out with this idea, the new Silk Road, so basically exporting those infrastructure capacity to outside. So actually that's, and then they provide a lot of very low interest loan to a lot of countries. So it's like increase China's influence, I'll put it this way.
Yeah, now they're increasing their influence. And so a lot of things I talk about rethinking the dollar is the idea that those nations that are doing business predominantly with China and Russia, especially in their partnerships and the trade deals and currency swaps they have, a lot of people are moving away from the dollar. Now, do you see that, all those activities that's happening on that side of the planet playing into the idea that they're bracing for the day they no longer want the dollar or need the dollar, or what?
Well, they maybe wish that they can stay away from dollar, but I doubt. I think dollar still is a king of the world. Dollar is still a reserve currency until United States ourselves destroy it. Until there is the government come in, have a $5 trillion a year deficit, then our people around the world start losing confidence. So my personal opinion is dollar still is a reserve currency until United States destroy ourselves.
Yeah, I agree 100%. And so a lot of things that concern me as I do a lot of, just investigative work is the amount of sanctions that we're passing on every country that don't really play by our rules. And because of those sanctions, more countries are coming up with alternatives, whether it be, as I mentioned, the currency swaps or just new payment methods to bypass the SWIFT. So I want to get your thoughts on the cryptocurrency sector, because Iran has a cryptocurrency that's in development, and I think Russia has something like that. So more people are getting to the crypto sector. Now, from a management standpoint, is that a viable option for asset managers to consider, given the fact that we're transition to solely a digital world in this point? What are your thoughts on that?
Yeah, my point of view is those cryptocurrency is a way of transaction, but it's not an asset. Okay, because the reason is that you can have one Bitcoin and all the people, everybody can make my coin or Chen coin, right? And then this become money. So nothing can compare to gold. Okay, gold is a real asset. I don't think the digital currency is an asset, but the digital currency is a good way for transaction, especially for those anonymous transactions like a drug dealer, like other country who want to avoid the sanction of United States.
Yeah. Now, we mentioned a lot about gold, but yet, the audience is a more precious metals. So do you have the same thoughts and feelings towards like precious metals such as silver and platinum or whatnot? What are your thoughts on, what's the preferred? Is there any preferred metal to hedge against complete fiasco of monetary system head, or is it anything of that nature worthwhile as far as preserving wealth?
Oh yeah, for if you just want to hedge against a disaster, I think the gold is probably the only solution. Okay, for investor like me, I constantly looking at different other metal, the supply demand. Right, I got into lithium a few years ago. That's completely different thing because I saw electrical car come. I invested in rhodium. I don't know if you know that. That 2 years ago had a double. I invested in palladium. Palladium went up from from triple digit to 4-digit, quadruple digit, and then right now I'm investing in platinum. I think it will probably likely follow palladium to 4-digit, from 3-digit to 4-digit. So it's more like a supply demand thing because of the part of it is China. Pollution is very, very severe, and so they need a tighter emission control. Right, when China basically this year, China going to have the same level emission control as United States and Europe. So then you need demand a lot of more palladium to reduce the emission of the car. That's causing a palladium shortage. Palladium is the best performing metal in the past 12 months, right? Palladium double, maybe more than double, around double. So my bet right now is platinum will follow palladium. Reason very simple. The automaker can interchange platinum with palladium. When right now palladium is 1500, platinum is 800 and change. So it makes sense for them to switch. So my point is, platinum will likely follow palladium to going higher. Plus, South Africa, which is the largest platinum producer in the world, the miners looking for strike. They were planning this week. The court delayed them, so we probably will get some information next week. So that's a scenario because this is the largest platinum producer, and then platinum historically trading at twice as gold. You always say platinum. People always think platinum is more expensive than gold. Now platinum is much cheaper than gold. Right, 1,300 gold. We have 800 platinum. So I feel that's a good risk reward. Right, 800 seems to be a bottom. You look at the long-term chart. 800 is the bottom. Right now it's about 850. So you have very low downside, but not high upside. If the platinum go back to historical, I'm not looking for twice as much gold. I just want to be the same as gold.
and that's more than likely. And so as you're describing that, my thought was, if we reach a point to where there's a type of, another recessionary type of event where a lot of people rush into something more so stable, then, anything in the form of a precious metals will probably double, go up, as we start off earlier talking about the price of gold possibly. So as we draw towards the end of our conversation this evening, I want to get your thoughts from an investment / a management perspective of, your thoughts ahead as you invest and as you manage funds, your 5-10 year scenario or where you see and how you manage risk, because I believe that, as you mentioned, all the things around us are changing. And so you have to be prepared for, currency events or war or whatever. What are some of your thought processes as you look 5-10 years ahead in relation to the dollar and its role in the reserve currency and just in precious metals especially? What are your thoughts on that?
Well, one possibility, as we discussed, we touched that a little bit, is the dollar could lose the role of reserve currency, and actually it's our own fault. It's a politician in the United States. They just destroy dollar. If that happens, gold will go so high that's it's like the 70s. Okay, we are not looking for $1,300. 1,300, we're maybe looking $13,000 gold, maybe more. I don't want to see that to happen, but it could happen. So that's one of the things for us as investor. You need to be careful. You need to prepare for the potential of the scenario, this potential scenario.
Yeah, you need to prepare for the potential scenario. So I like that. So once again, Chen Lin joining us. For any last thoughts you want to leave us with here, as well as share with the audience where they can find out more of your work, as well as your newsletter, and keep an eye on what type of work you have going on.
Oh, thank you. I have a website called chenpicks.com, just my name, chenpicks.com. And I have my annual outlook over there, free for your browse. You can see why I picked buying gold like crazy last December. I'm now taking profit out. I'm waiting for different event to happen next few months, and probably will increase my gold holding again. And I always looking for opportunities.
Mm-hmm. Fair enough. So once again, thank you for joining me, Chen. It's been great getting a chance to find out more about how you do your management portfolio aspects there. So once again, thanks for joining us. Wish you the best of luck the rest of this year, and definitely look forward to staying in touch with you and continue to follow your work, my friend. Thank you for joining me today.
Thank you, Mike. My pleasure.